I would say this, that owning a business can be life changing, and it's one of the most rewarding experiences for someone who really values that independence and owning your destiny and controlling your future yourself, betting on yourself. In a way, you are buying one stock. So that can be a very risky proposition. As we all know, you need to diversify your risk and invest in several stocks if you're into that. But here you are betting on yourself more than anything. You're buying that one company, one business. So you do get returns for that investment.
Welcome to Screw the Stock Market. On this show, we discuss a variety of alternative asset classes, tools to help you unleash your money, a success mindset, and inspiration to see what's possible when we do things differently.
Hi there. Thank you so much for tuning into the show. We work really hard to create a lot of content that is educational and informative. We also want to be the best listeners out there. We want to understand what you are interested in, what kind of investor you are, what your objectives are. And so we've created a survey at screwthestockmarket.com/survey. And there you'll be able to take the quick survey, and we'll be in listening. And that'll help us be able to create better content and we can engage more about how we can help you achieve your goals. So again, screwthestockmarket.com/survey. Welcome everyone to another episode of Screw the Stock Market. And today we're really excited to have with us Vipin Singh, who is actually a close friend of mine. We go back a few years, just a handful of years, but we're excited to be talking today about entrepreneurship through acquisition. So even though I know you, Vipin, I'm going to go ahead and read because there's been some surprises here that I didn't know about. So it says here that Vipin has worked for 20 plus years with global Fortune 500 corporations in investment banking, sales, finance, risk management, and consulting teams. Vipin has worked with large process-driven organizations like Visa, PricewaterhouseCoopers, Morgan Stanley, General Motors, Merrill Lynch, Scholastic, Teleperformance, General Electric, Hyatt. He incorporates the best practices utilized at these organizations in his business intermediary work. Vipin brings diverse experiences from investment banking, diversified industrials, printing and publishing, managed service providers, manufacturing, management consulting, and public accounting. Vipin earned his MBA from the University of Virginia. We were classmates there at Darden back in the day. And he's a chartered financial analyst, certified by the CFA Institute, and financial risk manager, certified by the Global Association of Risk Professionals. Vipin resides in Metuchen, New Jersey. I'm sure I didn't pronounce that correctly.
It's
How's that pronounced,
Metuchen.
Vipin?
Yeah.
Metuchen. Oh, that wasn't so bad. Okay. With his family. And this was a cool one. Vipin is a firefighter and volunteers with the Kiwanis Club of Edison. He's also an active member of the Association for Corporate Growth, Exit Planning Exchange, International Business Brokers Association, Middlesex County Regional Chamber of Commerce, the Asian Indian Chamber of Commerce, and the Greater Middlesex and Somerset County Estate Planning Council. Vipin, we're so happy to have you with us,
Thank
man.
you.
Thank you.
That's
Yeah. And that whole resume just exhausted me.
Sorry for the long one, but
No, it's just you're very accomplished. We're very excited to have you.
no, it's exciting. As Alex mentioned, he and I were together at Darden, and we've been in touch ever since. We've grown through the financial crisis days. That's when we graduated, and our careers took us in different directions, but we are both converging in a way because both of us, or all three of us, do this work in the private investing space, right? So I'm focused a little bit on small businesses, and Alex and you are focused a little bit more on real estate, but there's convergence there.
Yeah, absolutely.
You never know. We're trying to branch out, so.
Yeah, we've looked at a handful of businesses. We definitely see this as an opportunity and a place where we can continue to expand and grow, and we've had a few episodes on this. We've had some episodes about franchising. We've had another episode about this similar topic about acquisition through entrepreneurship. entrepreneurship through acquisition. But we're excited to have more to get your perspective on it and your description of the opportunity and everything. But before we jump into all of that, why don't you tell us a little bit about your background, where you came from, and how you got to where you are right now?
All right, so I think you covered most of it. That resume was long for a reason, so I would skip all that. A few things I'll mention that are not in that resume are that I'm an immigrant. I came to the US in 2006 when I was 27 years old. So some of that 20 years of experience was back in India. I used to work with the clients in the US, and I was here on a project in back in 2000 in Milwaukee, Wisconsin, and just loved it and wanted to come here for further education and then building a career. My interest while in business school, Alex, you might remember, was in investment banking. I spent a summer at Merrill Lynch and just loved the aspect of deal making, but I always blame the markets for not getting into investment banking full time. Merrill Lynch didn't exist independently. It was bought by Bank of America, and Lehman happened the year we graduated. So I went down the path of finance, risk management, worked with great companies, great teams, but wanted to do something which was a little bit more independent. I enjoyed my few months in investment banking and liked that experience of deal making. And I was actually looking to buy a small business before I jumped into what I do now. I didn't really see anything interesting. My search was very local. As my wife, we are common friends. She was happy continuing on her corporate track, and she allowed me to jump into this, which I think is an important aspect of someone is thinking of buying a business or investing in real estate. It's also a personal decision in a lot of ways, and you need to make sure that you're not derailing the rest of your sort of financial situation, and you're doing it in a well planned manner, as you don't want to add more stress to your life. The whole process of owning a business or owning a real estate property, it will add some amount of decision making and stress, if I may call it that, to the life. But you want to keep your personal life a little bit more balanced. So my wife was offering me that support, and that helped me get into this world of business brokerage. So essentially, because I didn't find any good small business to buy within my budget, within the geography I was searching in, I started looking at franchises. I wanted to stick to a B2B franchise, somewhat aligned with my background. Ended up finding this franchise through a few conversations with other franchisees. I liked the business model, I liked the people I spoke with. We are all good sort of colleagues and partners. We work on deals together. There are some senior business brokers in our team who provide us ongoing training and guidance. So it's very helpful to be in that environment where someone like me, coming from a large corporate background, I knew how to analyze publicly available financial data, but the world of small business is very different, and you need to know which rocks to turn and which leaves to read, and where is the real information versus what information you can ignore.
Absolutely. We can jump into some of that stuff. But so that's I think that's a great place to start then. Why don't we just jump into that then? First of all, I do want to spend a little bit more time on the
Yes.
spousal part, right? Because that is a really important thing. I think I've seen in this world of entrepreneurship, I don't know how common it is. I don't have any statistics about it, but I think divorce is a big issue, right? Like it's something where it's very
Yes.
consuming, and it's just common, I think, for people to eventually either grow apart or feel rejected. And the way you described the support that you got from your spouse, and I don't know, I guess maybe aside from your own personal one, can you talk maybe a little bit more generally about arrangements that you've seen? Because similarly for me, I was able to, when I took the leap in January 2022, things like insurance and kind of a lot of those basics to like, hey, we still have some basis here
Yes.
on which to
Yeah.
build. So Alex, go fly, go try this, and I'm gonna hold down the fort. And that made it
Yeah.
easier for me. But I've seen posts on the other
Followed up
side
with
where
"Don't lose our house."
yeah, I did have some that one boundary. She's like, when it came to getting loans and things like that, she essentially drew the line there saying, Alex, we will not take any loans where our home, our personal assets
Yeah.
will be at risk. And that was I appreciate that boundary. She said, don't cross that line, because there was times where I wanted to do it. But yeah, I've seen posts from men in particular. Maybe it happened to be one man in particular. I remember saying, what's up with my wife? She just wants me to keep working forever. She wants me to stay in this grind. She doesn't understand. And this was someone who hadn't produced anything yet in this side hustle. And some of the other comments responding to him were like, understand, this is scary. This is a real
Yeah.
risk. I'd welcome you to share just your thoughts
Yeah, I
about
think
that.
so. It's a very personal process for each couple to go through in terms of what makes sense for them. At a more sort of formal level, we have seen situations where a business owner might be the owner operator of the business, but the spouse is always there in the meetings and is key in the decision making process, which we appreciate. But at the same time, sometimes we ask people that maybe before we move forward with the process of selling the business, we should have some sort of a formal discussion. And we also have a spousal consent form that we have the spouse put it in writing that she's comfortable, or in the case of the woman of the house owns the business, then the husband has to be comfortable. So we want to make sure that both, it's almost like a partnership in that situation where we are talking to a business owner. But if you're talking from a point of view of a buyer and making a decision jointly, I think it's very important for both spouses to be on the same page and understand what it takes to get into this kind of a process. Putting your personal home on the line is something that is a big challenge, because if you go down the path of an SBA loan, for example, which is common in the small business space, SBA does require that you provide a personal guarantee from any partner in the business that owns more than 20% of the business, which would have sort of a lien, a second lien on the your house after the bank that has given the mortgage. So yeah, that is a decision that should not be taken lightly, and it it shouldn't just be a one and done kind of a discussion. It should be ongoing. And if on the business front there is some kind of a risk that is visible, you, both husband and wife should get together and talk about it. And communication is key. Like in any good relationship, we need to have some structure around it. Don't push it aside for the last minute. Don't expect that things will calm down and you won't have to share information as much as possible, and keep the other person in the loop, and don't surprise each other, because that's how relationships break down, when there's a breach of trust, or the one person feels that information was not shared and you didn't rely on their expertise, you didn't seek their guidance when they could have helped you. So of us try and keep that in mind, and we are always sharing notes or asking each other that, hey, I'm seeing this opportunity, do you think it's worth it? Or we talked about that the other day, but it doesn't make sense because of these three reasons. Do you think it's going in the right direction, or do you feel I'm missing something? It helps we have a similar background, right? So from that point of view, it's an easier conversation. It might not be the same for everyone, but the more we can address these kind of issues upfront and keep going in that same direction, it'll be better.
I think that one of the key points you hit there also was having the shared kind of background. It ensures that you both have the same vision, same plan, same idea. So it makes it so much easier in that
Yeah.
regards. You're both willing to take the same kind of risk because you understand what the parameters are equally in that kind of
Yeah, or
sense.
I would say I'm a little bit of more of a risk taker, and my wife is less. So that's how we balance each other out, right? She wants to do something which is less of a risk, but it keeps the ship steady. And then I am trying to open the sail and fly the ship forward. So just, I think,
Full throttle.
yeah, both things are required and helpful. You can't have a leaking ship. You can't have a ship that is just chained to the shore, right? So you need a little bit of both.
How beautiful. Yeah.
Definitely.
So no, I'm glad we found that, because that's, first of all, I know your wife and I think she's very smart, and I think it's really cool to hear that side of how that decision was made for your family. And I know that's an issue that a lot of people who want to become entrepreneurs, who want to escape their 9 to 5, have to deal with, because there is the reality of that. So I'm glad we touched on that. But now let's jump a little bit more into entrepreneurship through acquisition. And maybe you can
And
describe a little bit for us the opportunity. And you mentioned the SBA loans. And I'll say that for me, that's the main reason we haven't pulled the trigger on some of these. It's just I haven't been able to figure out a way around that one
Yeah.
constraint that I have. Yeah,
before
do
you
you have
get
stuff
into
there?
that, yeah, before you get into that, also, just for our listeners, you've mentioned that you're a business broker. Can you also explain what that is so the listeners have an idea of what you do on a day to day
Yeah,
basis?
so maybe starting with the second one, business brokerage is very similar to real estate brokerage, except that we are keeping the sale confidential and we are essentially in between the buyer and the seller, and the product that we are representing is the business itself. Sometimes the business owner also owns the real estate, and some of us, including myself, we are licensed to represent the real estate also. Some states in the US require a business broker to have a real estate license. That's how they manage that good professionals are in the profession. New Jersey is not one of them, unfortunately, but I am still licensed to do a commercial real estate transaction. And we only focus on when it's part of a business, not we don't get into like residential real estate. So that's the profession. And in terms of ETA entrepreneurship through,
So,
sorry,
just to clarify, so basically, you're managing the sales of businesses. So, if someone is like trying to sell their business or they're getting ready to retire and they want somebody to take it over and cash out and retire, they would call you to help facilitate that, or somebody that's looking to purchase a business would call you to help them find a business to purchase as well.
correct. That's the key part of what we do. But within that, I mentioned commercial real estate sometimes plays a role. So we have to be able to do that. And then also, business valuation is a key component of a business transaction. So it gets a little more complicated, and we can do a valuation on our own. We also have other partners that provide certified appraisals, similar to real estate. So, like a real estate agent would do a valuation up front, and if someone needs an appraisal that is required for tax reasons, then there's an appraiser that would come and do it. So we also have similar professionals. It's just the product is different, so we need to get into the accounting and some of the financial aspects of valuation. And there are some databases we use to get comps. And for small businesses, we hardly ever do something like a discounted cash flow that we study to the nth degree in business school. But that's more applicable to larger businesses. We hardly ever do that for smaller businesses.
And you're able to create the valuation of the business through that
Correct.
process.
And that's how a lot of our listings or engagements start. So when a business owner is in conversations with us, we are trying to assess their motivation, how ready they are to sell now or in the future. If it's a conversation for the future, then we recommend to them that now might be a good time to do a valuation and check where your business stands, because they might be getting all sorts of opinion about what their business is worth or how much money they can get from that business being sold. But unless they get a proper valuation done with data and third party opinion and seeing real numbers behind why that number is the way it is, it's hard to just use a rule of thumb and go with it, because buyers might have their own rules of thumbs and sellers have their own rules. And that's one of the reasons that it's very hard to make transactions happen, because both sides have their own views, and unless you can really show with numbers where you're coming from, you can't really have a well established, a thoughtful discussion.
Yeah, we had that experience from a conversation we had with someone a while back ago where he was sharing a similar situation where he was trying to purchase a business. It was his wife used to be in the hair industry many years in a past life, and she thought it would be a good idea to purchase a salon that she thought would be very successful. When they went to go speak to the owner, the valuation that the owner came up with was something absolutely ridiculous. It was like $5 million or something ridiculous. I don't remember the exact number, but it was just hyper inflated for a small salon. And when they told her, no, that's not realistic, best case scenario, your business is maybe worth $1 million. And she could not understand why that was the case. And they were like, what did you base this on? She was like, I don't know. I feel like it's a $5 million business.
Yeah, I think A lot of times people have a number in mind that they feel will help them retire. And it's again, we recommend to business owners that if they really want to have a thoughtful process around this, they should discuss with a financial advisor what will it take to truly retire. Because
Right.
we've had situations where businesses are listed, and when we get an offer in front of the business owner, they feel like, oh, it's too early. I can't just give up on my cash flow, and what will I do for the next 30, 40 years of my life? And we are all living longer and longer these days. Is that going to be enough? And they start backing off at that point. So we need to really ask these questions up front and make sure that the business owner realizes what will it mean to sell your business, and the amount of money you'll get, will it be sufficient or not? So all of those discussions have to happen much before a business goes to market.
Definitely, definitely.
That's really interesting for me because you mentioned how in your specific activity, there's all these parallels with the work of a real estate broker. And that's a similar story too, that a real estate agent would have to deal with. Is the motivation really there? Or do they really intend to buy? Do they really intend to sell? And now, from your perspective with that, what do you see as the big opportunity there? Like for maybe, I don't know, do we want to frame it as for a buyer? Because most of our listeners would probably be employed people who are hoping to be entrepreneurs this way. I think maybe for the purpose of this episode, it might be more relevant to talk about the perspective of the buyer. But I can imagine that's really frustrating what you just described. Is you go through all this trouble, it probably takes months and months of work to get to the point where you got a listing, you valued it, you get to that finish line and you find a buyer and you help them with their financing and you get them all the way there, and then no, at the end of the day, I don't really
Yeah.
want to sell.
Yes. From our point of view, the way we manage that risk is we have a small upfront retainer that we charge. Our clients have to pay that. Most of our fees is success based, just like the real estate brokerage model. But unlike real estate brokerage, where there is hardly any retainer, we charge a retainer. And a lot of clients who are not sure or are not yet ready, and maybe they just want to test the market, tell us that not right now, or they'll probably go to someone else. And then if things don't work out, then they'll come to us, which is fine for us because we are not doing this with the same kind of viewpoint that we have to sell lots of businesses and that's the only way to be successful. So, from a buyer's point of view, I would say that in the ETA community, entrepreneurship through acquisition community, there's a split view on, is it worth working with business brokers, or do business brokers make it harder to negotiate, right? Because some people take the view that if a broker is involved, then they are bringing their own views into the business valuation, which might be different from what the buyer thinks of the business to be worth. And they feel like we don't get the direct access to the seller, and it just makes the negotiations hard. Whereas the other view is that a business broker like myself or ETA generally is looking at larger deals, at least $1 million in EBITDA and 3 to 4 million value to start with. So at that point, it's called M&A advisor versus business broker. It's similar work, but the terminology changes. Some nuances are different, but an M&A advisor would prepare the business beforehand. They would check for motivation. Sometimes for businesses that have financial bookkeeping issues, they might insist that the business does a quality of earnings report, which is like having some amount of audit behind the financial records, because in the small business space, hardly any business has audited financials. They're all what they call compiled financials. So a CPA is not standing behind that number. He's just preparing it for the business owner based on what the business owner tells them to do. And they won't call it audited financials. That's just a very different level of scrutiny. So because those don't exist, a business of a decent size is asked to do a quality of earnings report that a buyer would be able to see. If a buyer was able if a buyer was to go directly to a business owner and ask for that, they might be just that might be the end of the conversation because you don't trust me. Why should I trust you? You want me to provide you a quality of earnings report? Thank you, but no thank you. So those kind of things, some buyers don't realize in the beginning, others do, and then they figure it out over time because it just a lot of this is self-realization, and you need to explore different options because there are so many different views out there, online and offline, that you'll get various opinions, and you have to assess over time what makes sense for you and who's saying it for some vested interest and who's giving you the right information. So you have to figure that out. It's not just written somewhere. Or we used to have, you probably remember, Alex, acquisition of closely held enterprises. That I forget
Yeah.
the name of the professor. It was a popular course, right? Lots of bidding used to happen during our second year. So that's what entrepreneurship through acquisition essentially is. It's what we used to learn in that class, and now it's become much more structured. I guess over the last few years, there are ETA clubs in top business schools, including Darden. Darden is part of a group that is called Southeast ETA, where Duke, Darden, and UNC, I believe, they collaborate and they bring speakers to one of the universities, and then they talk about how ETA works and the network in Southeast US, including DC and Atlanta and Carolina, South Carolina, that market.
Very interesting. Now, I want to ask one of the first objections that I've always heard from people whenever I mention this, that this world exists, is why would anyone sell a business that is successful? People are, I've mentioned this as just that this exists. I'm excited about it. I'm interested in buying a business. And the first thing that comes up is this kind of
Yeah.
skeptical kind of thing. If it's such a great business, why don't they just keep it and just let the money roll in? You're probably buying someone else's problems, someone else's headaches. And I'm sure there's some truth to that, but I guess I'd give you the chance to
Yeah, so we
respond.
spoke about this in the pre call a little bit. Most businesses are not set up such that the money just keeps coming in and the owner is not doing much, right? So the owner is doing a substantial amount of work. It might not be picking up the tools and widgets, it could be more managing people, building a culture, which, unless you're a business owner, you might underestimate the amount of work that is, right? So managing a team of 20 people might think like you can just sit at home and people just do their work, which is not true, right? So leadership and all those things, unless you have managed large teams, you don't realize how much work that is. So there is work involved, and even if you're just like the chairman of the board, you have to have regular meetings, you need to have the pulse of the business, you need to invest in systems and processes that you can track, KPIs, you need to keep up with the rest of the industry, you need to go to conferences and forums where you are networking with vendors, suppliers, customers, advisors. So it's not just not doing anything. And then the other way people manage that question is, a lot of the business owners who are selling are essentially retiring. So they're not able to keep the business running with their own levels of energy, and they've probably explored options to transfer the business within their family, but that's not an option because none of the family members are interested. And they don't think an employee would be ready to buy the business, so employee ownership is not an option. So that's ideally that's how the business owner should be exploring their options, that they should look internally first, and when they have exhausted those options, or they could run it in parallel, but selling to an external third party is one of the options for a business owner, and generally it happens when they are looking to retire.
And there's a huge surge in that right now. A huge portion of the population now is getting ready to retire, essentially. You have a lot of people hitting their 70s and their 80s, and they're not in any way, shape, or form ready to continue running successful, some of the multi-million dollar small businesses. So they have to offload them somehow and start collecting off of everything that they built the last couple of
Yeah,
months.
that's one of the underlying themes for ETA opportunities, that sometimes it's called a silver tsunami, that the whole baby boomer generation is now approaching retirement or are already in retirement and are somehow managing their business but are not able to take it to the next level. So that's where a new buyer would come in and put in systems and processes and consolidate a few of these smaller companies and then create like a holding company structure and then grow it further. That's once it grows beyond a certain level, private equity companies become interested and strategic buyers will be interested. Small businesses is generally an individual who has either some investors behind or might have to tap into an SBA loan to acquire that business.
And that's, I think, the next part of the conversation. We've talked about this world and like the ideas of how it functions and whatnot, but how do people get into it? What are the steps for the average Joe Schmo? They're working a W-2 job, they really want to become an entrepreneur and acquire a business. How do they get about it? And also, what are the challenges? We've already mentioned the SBA loan portion. We can get into a little bit more details with that, but give us like a how-to guide essentially.
Yeah, so the way I see successful buyers execute on this is that their personal why should be the first thing they should explore and make sure that they're personally ready and they want to do this. Because if they'll have doubts on the personal front, including we had the conversation about coordinating with your spouse, right? If you have issues on that front, you'll just keep running into obstacles. So first thing is to make sure you're personally ready. You know where you want to buy your business. If you are looking for a business nationwide, you should definitely have a consensus in the family, right? Because you'll have to uproot your family, move to a different part of the country. There have been instances where people have moved to a middle of nowhere location, right? Because that's where some of the manufacturing companies are, and that's where you get labor arbitrage, and people have to move from DC or some of the more populated suburbs to tap into those areas. So you have to be open to those kind of decisions. Uh, then it comes to your personal background. A lot of people look for business opportunities just based on where is the best financial return for my money, right? But it will be a challenge, especially when it comes to running a business. If you don't have some background, some understanding of what that business does, like I said, it's not just buying a cash flow stream that just keeps flowing on its own. You need to understand when things break down, how to fix. If someone is actually doing the work, you need to be able to at least train them, guide them. If you're not doing the work yourself, so all of those things just don't happen on their own, and having some background and experience really help. And banks look for that, for example.
Now,
Go ahead.
Now, can you hire out for some of those resources? Can you partner with somebody that does have that
Yes, you
experience?
can, but that's where it's either your time or money. So if you are not able to bring some of those skills to the table, you'll just have to eat into your profitability, and that would mean a lower return for your investment or a longer break-even time frame for what you're trying to achieve.
Now, one point I think for the three of us, actually, right? We have certain business skills, but Aziz and I were looking earlier this year at a glass company. And our main thesis for looking at this is okay, we want to be able to bring this company that has been around since the 50s into this century, right? With some more modernized marketing, some computer
Automation.
systems, yeah, some automation, that kind of. But we never knew. We don't know anything about glass, right? So when it came to installing glass in construction sites, that
Yeah.
wouldn't have been us. And so, tell me a little bit about how you've seen that issue. Probably personally yourself, you looked at you saw that when you were looking to buy your own
Yeah.
businesses. Because again, like I understand that there's work, but some of the work that you described is work that I think I could do, and then the other work is work that I wouldn't be interested in, right? Things like picking up a hammer, and if it's a construction
Yeah.
thing or whatever kind of business it might be. So tell me a little bit about how you see that
Yeah,
delineation
so
happen?
glass is interesting because I used to have a business in that space, and the business owner insisted that it's very easy for anyone to pick up a glass cutter and figure out how to make a new window. And every time I would have a buyer seller meeting, the first question the buyer would ask the seller is, how long can you train me in this business? Because I've never done this. And yes, it seems easy, but you'll have to train me and make sure that I'm comfortable. And the business owner was just not at a point mentally, I would say, that he would not be able to commit to a long duration of training commitment. And he would always say, oh, it doesn't take too long, and I can't promise that I'll train you for more than a month. That's all my bandwidth is. And
Mm.
all the buyers would walk away. And maybe the business owner was right. It wouldn't have taken too long for the new owner to learn that craft, but there's that hesitation and feeling of I won't be able to do this properly. He had one employee who was doing it, but he was not ready to own the business. And the other issue the buyers had that was, what if that employee leaves? There's just one person other than the business owner, and now I'll be new, I'll be learning the craft, and you have one employee. If he leaves, then I'm done. The business has that key man dependence. So it's very challenging to get into a space where you don't have the background. I myself was looking at businesses like hotel industry. I was thinking there might be opportunities during COVID. I didn't really find anything because I think PPP money was keeping all the hotel owners sufficiently safe, and they didn't really want to sell at that point because the markets were down, right? So the valuations would be down, and they didn't have to sell, so they did not.
You don't have any connections with any Patels by
I know a
chance?
few, and I reached out, but it takes time. That's the other thing, that this whole process of acquiring a business, it's dependent on who a lot more than what you know. So all the knowledge that we have acquired through our MBA, etc., that's all helpful, and we know the numbers, etc. But a lot of it is dependent on who you know, especially if you are doing like a focused geographic search. And you you can almost think of it like a triangle where it's the geography, the industry, and your budget. And if you are constrained on all three, you will have a very long search time frame. You have to be flexible on at least one or ideally two of those points on the triangle, and that's when your opportunities will improve. And my search, or like I would say, a lot of searchers have a very constrained view of all those three, and they are looking for a very specific business, which is in a certain geography, in a specific industry, within a certain very narrow margin of profitability and revenue. And it's not easy to find that perfect fit.
Absolutely. Okay.
Now, let's move on to the next stage. Let's say you found the perfect fit, you found the business. How do you go? First of all, where do people go to look for these businesses? Is there any type of main databases that they should be searching, or are they supposed to just Google business brokers, or how do they go about actually finding these businesses?
Yeah, so Google will bring us to the same places that I'll mention. Biz by Sell is the biggest website for small size businesses, let's say under 2 million in value. That's where most of the small businesses are listed, either by brokers or by business owners directly. And that's where it's the Zillow for small businesses. Larger businesses, some of them are listed publicly on, again, Biz by Sell might have some larger, good sized business opportunities. There are others like Axial is a big one. A few more, like there are niche business brokerage or M&A sites. For example, for e-commerce, there is a place called Quiet Light. There is a specific one for accounting. So some industries have niche websites where you'll find those when you Google those opportunities, because all these websites spend a ton of money on Google ads and SEO, so they rank on the first page, right? SaaS companies have a website called acquire.com. There's another one called flippa.com. There's another one called empireflippers.com. So these are the large sort of databases or marketplaces for businesses to be listed, and sellers are listing the business and buyers are looking for the businesses on these marketplace type websites. And then business brokers have a lot of the inside information on a lot of businesses that are sometimes not even listed on these websites. They might be only privately showing it to private equity investors or strategic buyers, because these businesses are not going to sell just by putting them up on a website. You have to really do like a road show that investment banks are always promoting opportunities by going individually to companies and presenting to them that here is a target company. For these reasons, it makes sense to do a strategic buy, and this is how you'll come up with the synergies and savings. And so that's what you need to have, like individualized conversations with some of the strategic buyers and private equity companies. So, depending on the size of the business, you have a broad spectrum of databases, brokers, both niche brokers and generalist brokers, and then a lot of it is done on a one-on-one basis.
Okay, okay. So a lot of
Yeah.
options. All right. Then, all right. So now we've found the business, we've identified it, we've figured out our niche. The big part is how do you buy it? We've already briefly mentioned the SBA loans without going into details about them. That's one avenue. We can talk about that or whatever other avenues you've noticed and seen that most people go about it. Because these are expensive purchases. It's got to be difficult to buy them.
Yes, in terms of the structure of the deal, it comes down to price and terms. So we mostly focus on price, but I would say 80% of the negotiation happens around terms, because price, you can come up with a valuation, like I said, based on data, and you can, both sides can have a certain view, and hopefully they are not too far apart. Once you have established a close, tight range on price, you have to agree in terms of how will you pay for that deal. And the larger the deal, more important terms become, because smaller deals, if you mentioned a hair salon buyer, they might be able to buy that business, well, not the 5 million one, but a small hair salon opportunity could be bought of cash savings that the buyer has, right? And they are fine with the price the owner is asking for, and they'll pay them cash and the deal is done, right? So no SBA loan, nothing required. But as deals become larger, you need to bring in other participants in the process. So a lender could be one of those participants. You could have investors who might participate in the equity or the down payment portion of the transaction. So you don't have to put in all cash yourself. In the ETA world, there are self-funded searchers who use their own savings to put in the equity. And there are the traditional search funds, which are essentially investors that co-invest along with the main searcher, who's going to be the CEO of the new company. So these other search funds are essentially investing like an LP would invest in a private equity fund. And then this main investor is like the GP, who also has some skin in the game, and he's running that business, right? So there's that LP GP structure in search funds as well. And as you look at larger and larger deals, the business owner has to participate in the next version of the company. So for smaller companies, we encourage business owners to do some seller financing, at least 10 to 15% is common. So it's more to show to the buyer, and the banks love it as well, that you're not just trying to get your money and vanish, right? You are going to be a part of the next version of this company. You have no worries that the business owner will be able to successfully pay you back. So that's how you show that you have skin in the game. You are going to get some money over time. And they also get tax benefits by doing that kind of a, they get paid over time versus getting all of their money up front. So seller financing is very common for small
And
business.
and just as a point of clarification for the listeners, seller financing is the process in which the purchaser can actually get a loan from the seller directly as opposed to the bank for a portion of the cost of the
Correct.
sale. So that can help subsidize the sale.
Yeah, and they pay over time. They pay some interest on it. The seller might want to put a lien on the business, or sometimes they ask the buyer to provide a personal guarantee, because they are also trying to protect the loan that they are giving, just a bank would. It's just a way for the seller and buyer to come to terms with. The buyer feels there's less of a risk. The seller feels that they are going to help the buyer a little bit more, and they are also showing some more faith in the buyer, because only then they will do seller financing if they know that the buyer will be successful with the business. Otherwise, that business will have to come back to them and then they'll be back to square one. So they don't want to deal with that. They want a good buyer who will pay them their seller financing and the upfront cash, and the deal gets done. And then when businesses get bigger, there are other ways like earnouts where the owner will get paid over time based on future revenue stream, which even seller financing, you can define the terms that you will be paid if the business stays above a certain threshold. So there can be some contingencies that a buyer can build into the seller financing, the seller note. And then earnouts work in a sort of similar way, but you can build a little bit of upside there, which SBA, by the way, does not allow. In a SBA transaction, you can't have a earnout structure where the seller can get more money over time if the business does really well. So it has to be capped at a certain price because SBA deals have to have a predefined price. It can't be that if the business grows 30% over the next few years, then the seller is getting more money from the transaction. That's one nuance that sometimes people forget. And then there are, for even larger transactions, there are other things like rolled equity, where the existing owner is putting some of the equity into the new business, and they are selling maybe say 80% of their business and rolling the remaining 20% into the new business. So that's a common thing that happens for large public company transactions also, that some of the shares are paid in cash and the rest are an equity transaction.
That's pretty
Now,
interesting. Go
yeah,
ahead. Go ahead.
one of the things that we've noticed. Sorry, I'm talking a lot, ain't I? No, last question from my end. But one of the things that we experienced when we were trying to do our business acquisition is, so Alex and I are, for a lot of our real estate deals, we do it through capital raising through investors. So we were trying to do the same thing in terms of this deal as well for acquiring the business. But we found that the broker was really just very adamantly against that. I think she, whoever they were refusing to even speak to us unless it was directly with only one person and one person was involved in the deal at all. So is that a common issue? Is that why is that?
So I think the issue is that a lot of brokers have burnt their fingers with situations where the buyers don't have the funds available and they have a promise that there are investors behind the deal, but that promise is not really based on facts. It's more of just a promise that someone will put money into the deal. And brokers are trying to save their time essentially, to not have to spin their wheel and then find out at the last minute that the investors didn't really bring the money to the table that they promised to bring. So if you can really show a structured fund where, you know, it's more of a committed fund and not like the investor will bring money to the table if they like the deal type of a situation, that's where brokers will be interested, because they will do deals all the time with private equity funds, the structured private equity funds that have committed capital. They can call capital, and there's sometimes enough dry powder that they don't really worry about all the LPs bringing the money that is promised, right? But individual buyers, if they go in saying that I have investors behind me, uh, we need to move forward based on the promise of investors funding, some brokers don't like to go too far in that direction unless they've done some deals with you. It's all about, if they trust you, they like you, and if you can show them that you've done similar deals with someone else and build that trust, then anything is possible.
Okay, that's good. Yeah, I think in our case, it felt like they simply weren't
Yeah.
familiar with the private equity type of structure, right? Because they, at least the one thing that the guy told me was, we don't want too many cooks in the kitchen. We just want one point of contact. And we told them, no, we'll be your point of contact. It's just
Yeah.
Aziz and I, and we'll. But I think maybe what you're getting at is he was using that as an excuse. He might not have really fully believed we could have done it.
Yeah,
But
like they might not understand how it works, and they might have just heard through other brokers who have had bad experiences. And yeah, if you sense that, I would just say that how you get your funds is up to you, and you don't really have to get into all the details. When they ask for proof of funds, you should have a way to show where the funds are kept and how your fund is structured. But yeah, too many cooks in the kitchen can cause a problem. But if you're managing the investor relationship, then a broker should not be worried about it.
Vipin, I feel like we might need to have you back because I feel like we're only really scratching the surface. Like we didn't really dive into valuation, which is a whole nother thing. Like we've looked at some companies where the books are pretty good, right? Like they have a bookkeeper and they have a CPA. And I remember there was one that I've looked at, especially just on my own, where I was looking at like a laundromat and it's just this black hole and you don't really know what's real and what's not. It's the person. I remember when we looked at the laundromat, the one of them, the woman was like, yeah, like we say we earn this much, but really we earn a lot more. And I don't know, am I supposed to pay you more because you lied? I don't know. It was just weird. I feel like that's a whole nother episode, really, because
Yeah, that's where the terms can
but
matter, right? So if they can't show the rest of the earnings, then they have to take like an earn out type of a structure, right? They won't get cash for money that they're not even able to show. Yeah, we are available for anyone who is interested in having a discussion. And we also recommend that sometimes it's helpful for buyers to get a business valuation done if the seller does not have a good valuation report that is reliable. Um, that helps just from a discussion point of view, and you can use that as your negotiating leverage sometimes. That I see these issues in your business, and they'll provide you counterpoints, or they will have to give you some leeway on the price or terms, right? So it's a good tool to have a more structured discussion with a business owner if you have a good valuation report on your side. And we do buy side engagements as well, where we represent buyers. Mostly our process similar to real estate. Mostly it starts with the business owner. So once we have a good business listed, then the buyers find us, and that's how most of our business engagements work. But sometimes buyers engage us to help them navigate the process because it can be nerve wracking, and you need someone who has been there, done that, has some experience in the space, and can help them navigate the discussions.
Sounds good. Sounds good.
thank you, man. Really, it's been really great catching up and just seeing like all the stuff that you've accomplished, all the stuff that you've done that I didn't even know you were doing, including fighting fires. If there's a fire, don't call 911. Call Vipin. He'll come. No, that's a
Yeah.
joke. Call 911. They'll call
Yes.
Vipin for you. But Vipin, do you have any last kind of words of encouragement or last message for our audience for this episode? We're going to have you back. And then, obviously, if you want to invite folks that might be listening to connect with you, I'd encourage you to share your contact information so that they
Yeah,
can reach out.
definitely. So I think most of my comments were maybe scaring people away, but in terms of encouraging comments, I would say this, that owning a business can be life changing, and it's one of the most rewarding experiences for someone who really values that independence and owning your destiny and controlling your future yourself, betting on yourself. In a way, you are buying one stock. So that can be a very risky proposition. As we all know, you need to diversify your risk and invest in several stocks if you're into that. But here you are betting on yourself more than anything. You're buying that one company, one business. So you do get returns for that investment. So in general, for small business, we are talking about a business of, say, 500,000 to 1 million in profit. Those businesses, roughly, general range would be they would be selling for 3 to 4 times earnings. And you are then, at that case, looking at 25 to 33% return on your money. But it's not free money. It won't just happen passively. You have to put some skin in the game. You have to work yourself through that business. And those kind of returns come because of your effort and your risk management capability and ability to manage people and ability to grow businesses by implementing some of the tools like you mentioned, digital marketing, and bringing some automation into the business, because a lot of these businesses are owned by the prior generations that haven't implemented those tools and techniques. So that's how you get those returns, and it can be a rewarding experience. The business owners I work with, despite all the issues you might think those businesses have, these businesses create a lot of wealth for these business owners. They are able to run their household, send their kids through college. These are good businesses which have generated a lot of wealth and income for these business owners, and the next business owner can only make it better and take it to the next level. So it is a great opportunity, but for the right individual who understands how to manage these businesses and how to grow them successfully. And to answer your final question in terms of the way to reach us, we have our website. My website is murphybusiness.com/Edison, as that's the town that the business is located in, New Jersey. And my email is v.singh@murphybusiness.com. I'm on LinkedIn, Twitter, so all social media channels, but email might be the best, v.singh@murphybusiness.com.
Vipin, thank you so much, man. This has been good and just really encouraging, really, I think realistic, but like encouraging, right? Hey, this is challenging, but it can be done and it can be really worth it. And there's a lot to it. I think we definitely got to have you back and dive a little bit further
Yeah.
into the weeds because
You were super informative. You gave the steps, step by step.
I'm glad. Yeah, we can do this again, and
thank you so much for being on
my
the show.
pleasure.